Good afternoon and welcome everyone to the February 2025 regular meeting of the Finance and Risk Management Committee. I am Paloma Aguirre, interim chair of the FRMC representing the city of Imperial Beach. We welcome members of the public, community power staff, and committee members joining us in person today at the City of Chula Vista Council Chambers. I will now call the meeting to order of the regular FRMC meeting. Mari, please call the roll.
Director Yamani?
Here.
Director Yamani?
Here.
Director Suzuki?
Here.
Interim Chair Aguirre?
Here.
No, we have quorum.
Great. Please stand to have the Pledge of Allegiance. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you very much. Do we have any items to be added, withdrawn, or reordered in the agenda? Seeing none. We're going to go to agenda, non-agenda public comment if there's any.
No, Madam Chair.
Seeing none, we will now move on to consent calendar. I'd like to entertain a motion to approve January 16, 2025 meeting minutes.
So moved, Madam Chair.
Is there a second?
Second.
Great. We don't have any public comment for consent.
No, Madam Chair.
Any committee comments, questions?
No, Madam Chair.
All right. Well, there's a motion and a second. All those in favor say aye.
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 Aye. Any opposed? That motion carries. Now we move on to our regular agenda item 1, amendment of the FY 2024-25 operating budget, the FY 2024-25 capital budget, and the FY 25-29 capital investment plan. I'll now turn it over to Dr. Eric Washington, Chief Financial Officer and Treasurer, to present the item.
Thank you, Madam Chair. Good evening, public. As stated, I'm Dr. Eric Washington. I am the Chief Financial Officer and Treasurer at San Diego Community Power. We are seeking from this committee, the Financial Risk Management Committee, support for a recommendation to the board to amend our fiscal year 2024-25 operating budget, fiscal year 2024-2025 capital budget, and fiscal year through fiscal 29 capital budget. And I'll be co-presenting this item with Timothy Maglamont, our director, and our director of finance. So Tim will be presenting the next few slides, and then we will entertain any questions or comments from the directors at conclusion. Tim.
Thanks, Eric. Hi, Chair Aguirre, Director Yamani, Director Suzuki, Timothy Maglamont, Director of Finance at Community Power. I have the pleasure of presenting the budget amendment for fiscal year 24-25. Before I get started, I did want to take a quick opportunity to thank staff and the finance department for not only just the work on the budget amendment, but then also for exercising pretty strict fiscal controls and accountability, especially for our ratepayers and being good stewards of public funds. We always start out here with the budget policy that was adopted by the board back in July 28, 2022. Through that budget policy, you did set parameters in terms of setting a balanced budget, and then also in terms of a timeline for when we want to go to the board for budget development and for a scheduled mid-year review of the budget, which is what we're seeking for as part of this action. I can go to the next slide. The finance team also maintains internal principles for things that we're actively looking for as we're managing the budget, as we're developing the budget, and as we're doing this budget amendment. The two ones I'll highlight. First, you heard a lot about this in the last rate setting meeting, are maintaining sufficient reserves for the agency so that we can have a strong fiscal footing to maintain the agency for the future. And then the other one, which I think is a pretty key theme of the budget amendment, is just maintaining fiscal responsibility. So I think the agency, as you'll see through the budget amendment, did a pretty good job in terms of managing what we had under our control in terms of expenses and reducing those expenses part of the budget amendment. I can go to the next slide. So the top row here represents what the board adopted back in June of 2024 for the adopted budget. And then the bottom row represents what we're proposing for the operating budget amendment. If you go to the next slide, what this translates to is, and what we're seeking for the operating budget is an increased appropriation for the revenue side of 43.3 million and an increase on the expense side of 43.2 million. These costs are in direct alignment with what the board approved on February 7 in terms of the rate setting. So with the rates that were set, it does result in a $43.3 million increase to revenue. And as discussed during that February 7, 2025 board meeting, we do have higher renewable costs, higher costs for resource adequacy, and that's resulting largely in that $43.2 million appropriation increase on the expense side. All that's to say, we do consider this more or less a zero-based budget, as our net income does increase slightly with these two changes by increasing by about 0.2 million as a result of these expense and revenue changes. And again, this is largely due to what the board already approved on February 7. So this is kind of amending the budget to account for that. If you go to the next slide. So this is the standard, I think, eyeglass slide that most finance people present. I'll try to walk through this as briefly and as succinctly as possible. So I went over the revenue side and the expense side in terms of those increasing by 43.3 million for revenue and the 43.2 million for expense for cost of energy and expenses. I do want to take a moment just to highlight the non-energy costs in terms of that $3 million savings that you see on the column all the way to the right. We do consider the non-energy costs to be in direct control by Community Power. These are things, for example, like personnel costs, professional services for vendors and contacts, and then general and administrative costs. Again, we do consider these to be under direct control. And we did, with the stewards of the finance team and staff, we did save $3 million on the non-energy side. So total operating expense that we're proposing is a $40.2 million increase to operating expenses. Debt service stays the same, and kind of the last thing here that we're hoping to get approval for to advance to the board is an increase to the capital budget and to our capital investment program of $3 million. So with those savings, we are proposing to shift over $3 million from the operating budget and into the capital budget and CIP to fund the solar battery storage program, which has been a really successful program. It's a way for not only our community to get investment into the community through solar and storage systems, but it's also a way to kind of transition energy away from having to purchase in power purchase agreements and then having it be produced directly by residents who can also take advantage of energy being produced directly from their houses through solar panels that get installed on top. And then again, the last thing I'll mention is this all results in an slight increase in that position of $0.2 million through this budget amendment. Next slide. Going into a lot more detail, and I'm not going to highlight every single section here. So our budget is broken down into different, what we call budget level 2 categories. On the left, on the right side, but on the left, you'll see what we're proposing in terms of the budget amendment. And kind of the right is what the original budget was that the board approved. We went over cost of energy and revenue, so I won't touch on that. We are proposing decreases to both professional services and general and administrative costs. Again, we consider a lot of that to do with just fiscal controls and management internally. We are also actively trying to see if we can shift over some professional services over to in-house personnel. So that's part of the reason why you see a decrease in professional services, and then you see personnel kind of flat between the adopted budget and the budget amendment. And again, the last thing I'll highlight is that $3 million proposed investment into the solar battery storage program by shifting $3 million from the operating budget into the CIP. Next slide. Last slide here. So we do always try to compare ourselves just to see how we look in comparison to our CCA peers. In particular, Clean Power Alliance is the closest CPA to Community Power in terms of number of customer accounts and just in terms of just energy that we can procure. Two things I'll highlight here. First thing is non-energy costs. So given our load and customer size, we do consider ourselves close peers to Clean Power Alliance. but we do have, I think, significantly lower costs on the non-energy side in Clean Power Alliance. And again, I think a lot of that has to do with just managing really actively our non-energy costs. So we can be, again, good stewards of repair funds. And then the last thing I'll just mention is we do have a ratio at the right in terms of just energy costs as a percentage of net revenue, which is a ratio that we look at to see how well we're doing in terms of managing energy costs. One of the things I'll highlight is, as the board knows, we did do our first clean energy prepayment transaction back in November of 2024. Clean Power Alliance has actually done 5 of those prepaid transactions, and each one of those saves about $7 million. So it's, I think one of the big reasons why Clean Power Alliance has that lower ratio than we do is because they've done a lot more of those, and it's something that through Dr. Eric Washington, we're hoping to do a few more of these this year to get more savings for raters. And with that said, Chair, that's the last slide. Actually, Eric, I'll turn it over to you to give closing comments and we get you back.
Great, thank you, Tim. Thank you so much for the great presentation. And thanks again to the finance team for all the hard work to putting the budget together and then coming alongside of Tim and me to manage that budget and be fiscally responsible to make sure that we are firing off on all 7 of those finance principles that directly point to our strategic goal, planning, mission, and vision, which is really important as a mission-driven, vision-focused organization, focusing on doing the best we can, showing up as best we can in the community for our ratepayers. So with that, Madam Chair, I will turn it over to you. Thank you very much.
Thank you to both of you for a very great presentation. I'm going to turn it over now to the board directors to see if there's any comments or questions.
Comment, Madam Chair.
Director Yaman.
Through the chair, thank you. Want to thank the team of Dr. Washington and Tim for doing a diligent adjustment or amendment to our approved budget for 2025. As we can see here, I don't know how you sharpened that pencil, but I am glad to see that our net position is the same. And then, I mean, just like to also mention, I mean, the prudence of how we said, okay, let's look at professional services and create jobs, which is what, I mean, we wanted to see in this organization is creating jobs to, I mean, people here in our jurisdiction. I also have, I mean, look at the marketing and outreach, general administration. I think this has been clearly looked at very, very carefully. I had comments during my briefing with Dr. Washington and Mr. McLifmont, and I just wanted to make sure that they had taken notes on those. I mean, creating jobs, looking at the, I mean, that our net revenue is there, and that our projects our cost of energy is right on target. I mean, working with our partner agencies and as well as, I mean, watching the operating expenses closely. So thank you for your work. I'm sure that when the board will see this at our board meeting, that they would also be happy with this result. Thank you, Madam Chair.
Thank you, Director. Any other comments?
I just wanted to thank everyone, thank the staff and Tim and everyone, Dr. Washington, for working so hard on this. I do have one question. You mentioned the ratio, and you said that you compared the other company to with what they had done, and you said that's why theirs was lower. And is this something that is fairly new that we found out about, or is it like, can you explain that one a little, because I didn't really understand.
Yeah, I can start, and perhaps Eric, you can chime in on it. So just through the chair, Clean Power Alliance or another community aggregator like Saneo Community Power, they're located in LA, which is part of the reason why I think they're similar in size to us. So there's a little bit more to it, but Clean Power Alliance has been around longer than Community Power has. And so as we're entering into power purchase agreements, like longer term power purchase agreements, their power purchase agreements and the projects that underlie that, they've come online, I think, earlier than our projects. So that's one thing that they've been able to take advantage of in terms of having lower energy costs than community power. But kind of the other thing I'll mention, and I just quickly chime in more on this, is the clean prepayment transactions. The board approved one back in November of 2024. And I think that achieved a $6.8 million annual savings for the agency over the course of 7 years. And then after that, it's a guaranteed $3.5 million of savings for that one transaction over the course of 30 years. And the agency can do several more of those. And Clean Power Alliance has done, I think, 5 of those. And so if you just imagine using that first transaction, $6.8 million in annual savings and multiplying that times 5, if you do 5 with Clean Power Alliance, I think it's one of the big reasons why their energy costs, not necessarily lower, but I think they've been able to take advantage of some savings that we're hoping to take advantage of here too. And Eric, if you could add more.
Yeah, thank you for that, Tim, and thank you, Chair, Madam Director, for that question. That's an excellent question. So this is just another mechanism that we intend to come to the Finance and Management Committee in the near future and ultimately to the board, similarly to the way that we transacted the first prepaid financing transaction that Tim alluded to that saved us on that one transaction about 6.8 million. And so we intend to do several more of those subject to board approval in the future that will yield similar savings. And another point that Tim drove that I just kind of wanted to reiterate is that when we talked during the rate setting session, we identified, I want to say 5 key risks. And one of those 5 key risks is exposure to the market. And our exposure to the market is related to how many long-term contracts you actually have locked in. So a Clean Power Alliance being on longer has had an opportunity to lock in more contracts at fixed pricing. So less market exposure, and then translate those into the number of prepaid financing transactions. They've been able to leverage those fixed lock prices and sort of provide some extra savings for them. So we're looking to do something similar in the very near future. Thanks again for the question. Actually, Madam Chair.
Thank you very much. And I just want to appreciate all the work that went into this and very thoughtful consideration to have your due diligence and make sure that we reach a balanced approach to our budget and remain fiscally prudent in these times, especially as some things we can control and some things we can't. I would just add that moving forward in the future, some of the expenses that we have made in the past, maybe we revisit to better determine if that's the course that we want to continue to take, especially around marketing. I know that we had a discussion about that in a few meetings ago. So just something to start thinking about moving forward. Director Yamani, you wanted to add something?
Yes, through the chair, I think it would, I'm excited to see the report for the mid-year also. That should be coming up very soon. But I think this adjustment that has been done for our consideration by the board has been diligently studied by the team of Dr. Washington and Director Tim here. And those comments or changes that we would like to see in the future would be was really noted very, very strongly. But right now, I am, I agree with this adjustment due to all the things that has been considered, and so if I may, Madam Chair, move to accept this amendment.
We need to ask for public comment.
Oh, there is public comment.
There is a-
There is none, Madam Chair.
Sorry.
Seeing none, then we will, Director Yamani has made the motion. Is there a second?
Second.
I'll just read into the record that the motion and second was to approve the amendment to FY 2024-2025 operating budget, FY 2024-2025 capital budget, and the FY 2025-2029 capital investment plan. So with a motion and a second, those in favor say aye.
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 Any opposed? That motion carries unanimously. We'll now go to item number 2, treasurer's report for period ending December 31st, 2024. I will now turn it over to Dr. Washington and Bill Dennehy from Chandler Asset Management to present this item.
Thank you again, Madam Chair, and again, for the record, Dr. Eric Washington, Chief Financial Officer, Treasurer, at San Community Power. I'm presenting for the Finance and Risk Management Committee to receive and file the Treasury report for the period ending December 31st, 2024. Next slide, please. This slide is really a highlight of our year-to-date performance as we look at where we actually landed during the 6-month period of the fiscal year compared to what we budgeted for. So I will highlight at this juncture, as Tim pointed out, we are seeking approval to amend the budget. So in future reports, we will see the impact of those changes in the Treasurer's report. But for the sake of this report, through December 31st, 2024, we ended that period with a net position of $38,388,000. And that was against revenue of $756 million after covering expenses of $717.8 million in expenses, of which the higher portion of that expense budget was attributed to the cost of power at approximately 91% of revenue. So the table in the upper right-hand corner is a numeric depiction of actual results compared to budget, where we came in over net revenue to the tune of about 3% of what we budgeted. So we were over budget on the revenue side, which is positive for us. But then we were also over budget on the expense side at approximately 6%, which landed us at that net position of $38.39 million, I'll call it, rounded against the $53.99 million that we had budgeted for. The chart on the bottom of the table is an illustration, a bar illustration of where we landed. As you can see, we were over budget on the revenue and then over budget on the expenses and slightly under on what we projected according to our budget in the net position. But nevertheless, we were able to make a positive contribution to our reserves. Said differently, that's our change in net position translates to the contribution to reserves. Next slide, please. So this slide is a dashboard depiction of many of the items that I just spoke to with a couple of added components. So again, reiterating 38 million contribution to reserves, which allowed us to achieve 67% of our reserve target of 556 million, or 180 days cash on hand. When we look at our unrestricted cash and adding to that our availability under our line of credit, we look at total liquidity, and total liquidity at the end of December, we were at 583 million in total liquidity. This next slide is a bar depiction. Next slide, please. It's a bar depiction in terms of days cash on hand, including the unrestricted cash, as well as the contribution to that unrestricted cash to equate to days liquidity on hand, where we landed at the end of the December period, 188 days cash on hand. From a pure cash perspective, we ended the 6-month period with 120 days cash on hand. Next slide, please. So we always like to identify one of the risks that we have to contend with, and that's participation risk. And I'm happy to report that Community Power continues to maintain one of the higher participation rates among CCEs in the state of California at over 95% participation. So that's thanks to the efforts of our entire staff. Shout out to our accounts services team, which are in direct contact with our customers, really making sure that they're aware of programs and other things and other measures that we're doing to retain them as customers and make sure we show up as best we can for our customers. So with that, I would like to invite Bill Dennehy to the podium, and he will provide a highlight of our investment portfolio that's under management with Chandler Asset Management. Bill, take us on.
Thank you. Good afternoon, everyone, and thank you for having me here. My name is Bill Dennehy. I'm one of the co-chief investment officers at Chandler Asset Management. My colleague Dan Delaney was unable to make it today, so I'm substituting for him. So in the future, you will either see myself or Dan Delaney presenting to your board. So with that, if we could go to the next slide. One more, please. So I'm just going to provide a brief economic update before we talk a little bit about the portfolio. So the chart on the left shows non-farm payrolls, or the monthly job growth that the economy has experienced. It's been quite strong for the balance of the year. The 3-month moving average is around 170,000, which is definitely consistent with the economy expanding. And if you look on the right-hand side, you can see the unemployment rate is relatively low. We do think that the employment situation is going to gradually deteriorate in 2025. And that's because we are seeing some leading indicators, including the fact that job openings are really decelerating a little bit. And we see continuing claims, which is the weekly number that comes out, that there's more people that are staying unemployed for longer, which leads us to believe that this number is going to gradually deteriorate as we work our way through 2025. We can go to the next slide. So this is a snapshot of inflation, which has certainly been an issue for the economy for the past couple of years. On the left-hand side, we have the consumer price index. This is more widely followed by consumers, and it's been a little bit elevated, but trending in the right direction. On the right-hand side, we have the personal consumption expenditures index. This is the index that the Federal Reserve uses to set monetary policy. And what they really want to see is that dashed line to be around 2%. You can see it's trending in the right direction, but it's still above that number. When we look at the totality of data, including the trends in wage growth and just what we see happening overall in the economy, we think it's going to be a bumpy ride because of some of the tariffs and some of the uncertainty related to that. But the key point is that we continue to expect that number to gradually move towards that 2% objective, which implies that interest rates should gradually move lower, particularly at the front end of the curve, as we move our way through 2025. We can go to the next slide, please. So here we have just a snapshot of treasury yields, and I really want to move to focus our attention on the chart on the right-hand side. The green bar is where we ended the year at the end of December of 2024, and you can see the dashed line is where we were at the end of the third quarter. The important takeaway here is after the election, interest rates moved materially higher, and they moved higher because the expectation was that we were going to have divided government. And the fact that the election results showed that we did not have divided government, coupled with the policies of the new administration, most investors are a little anxious that our deficit situation might not improve as quickly as we'd like, and that the uncertainty of the tariffs is just creating a higher interest rate environment. Chandler's core view is that that curve should continue to steepen, and it should continue to steepen because shorter end rates are eventually going to gradually start to come down, and 10-year notes are likely to stay around where they are. And what we think this means for your portfolio that invests between the 0 to 5 year point is that those investments sort of between 3 to 5 years should be positioned to do very well as we roll through 2025 and interest rates continue to normalize and the treasury curve steepens to a more normal spread, if you will, between 2 and 10-year notes. I know that's a little bit technical, but that's overall what we expect to happen to the market. So if we go to the next slide, I'm going to talk a little bit about the account profile. If we go one more. So really our investment objectives that our team or with your organization on are very consistent with California government code. It really can be summarized as safety, liquidity, and return in that order. So when we make investments, we're most concerned about the safety and liquidity. And then our third primary objective is to generate a reasonable return relative to our benchmark over an investment cycle. We invest in very high quality securities, again, consistent with California government code. So this is a very conservative state portfolio that really invests between 1 to 5 years. We go to the next slide. So this is a quick snapshot of the portfolio, and I can't really see that slide too well with my glasses, but I can talk about it because I'm very familiar with it. But the key takeaways are, you can see that market value between September and December increased from a little over 25 million to a little over 50 million. That's because the portfolio continues to grow with with Dr. Washington and his team continue to grow that portfolio. An important subtle takeaway is that the amount of money that's been given to Chandler is exactly $50 million. And you can see that market value at the end of September is greater than $50 million. So we have added value to the portfolio, even in this volatile interest rate environment. You can also see that the purchase yield of the portfolio moved a little bit higher. But an important takeaway is the market yield of the portfolio. So the market yield is if you went out and bought every single security in the portfolio on that date, it would be reflective of what the yield would be of those securities of the price. And you can see that yield went higher between September and December as interest rates moved higher. So that did affect the mark-to-market value of the portfolio, and I'll talk about that a little bit more in another slide. We go to the next page. Here you can see just the overall asset allocation of the portfolio. This is a snapshot as of the end of December. And because of market dynamics and when that cash came into the portfolio, it was positioned a little bit more conservatively than usual, and that our treasury allocation was pretty elevated. I can tell you that as of the end of January, all of that excess cash was reinvested into the strategy. So now we have a corporate allocation that's close to 25% of the portfolio. That treasury allocation has come down, and it's a really well-diversified portfolio consistent with what we're doing with our other mandates that follow a similar strategy and have a similar investment policy. We can go to the next slide. So these next 3 pages, it's a compliance dashboard report. This report is really important for staff. It's sent every month by the 3rd business day, and it really provides, on the left-hand side, it shows what the standard is. And on those other columns, it shows that we're in compliance. I would just emphasize that all of our portfolio managers are familiar with California, or are experts in California government code, and familiar with your investment policy as well. So we have our own eyes to determine what's eligible, but we also have a pre- and post-trade compliance system. So if one of our portfolio managers, if Dan were to go to try and put something in the portfolio that was outside the scope of your investment policy, we actually have a system that wouldn't enable them to move forward. So we just want to emphasize that we have invested in a lot of infrastructure to make sure that we have a very compliant portfolio, and I think that's important for your organization to know. So a little bit. So this is a snapshot of the 3 primary rating agencies. So we have S&P, Moody's, and Fitch. And you can see that the graphs all look a little different. And the reason why they look a little bit different is because each of the rating agencies has their own subjective evaluation of all the underlying securities in the portfolio. The most important takeaway from this chart is that Moody's is the only rating agency that still rates the United States AAA. S&P and Fitch both rate the United States government in the high AA tier. So that's something that is, unfortunately, it's likely that Moody's is also going to eventually downgrade our debt as well because of our deficit situation. But nonetheless, when we look at the overall schematic, one of the big takeaways is every single security we hold in the portfolio is rated by at least one of those 3 rating agencies. And in many cases, 2 or 3 of the rating agencies rate the underlying securities held in the portfolio. Go to the next page. So this is the duration distribution of the portfolio. And for bond geeks like Dan Delaney and myself, this is a really important chart. The green bars show the allocation of the portfolio, and the sort of grayish bars show the allocation of the benchmark. If you look at this chart, you can see that that green bar at the very front was very elevated. That's because we had that cash contribution towards the end of the year, but we really wanted to wait to the beginning of the year when the market was more liquid to put that money to work. And if we were to look at this chart today, it would show that the green bars between the 3 to 4 and 4 to 5 year portion were actually above the lines of the index. And that's related to what I was speaking to before, where we really think that 3 to 5 year portion of the yield curve is the most attractive portion to generate above benchmark returns over the cycle. So that's something you'll see in a go-forward report with how the structure of the portfolio is positioned. We go to the next slide. So this last slide shows the performance of the portfolio. Please note, we didn't start tracking performance until the 4th quarter of this year. And that's because we knew that money was going to be invested in the portfolio that wouldn't be allocated up to our overall standards. But as I alluded to before, you've contributed only $50 million exactly, and the market value of the portfolio is greater than $50 million today. So in reality, we have generated a positive return for the portfolio. But because interest rates changed so dramatically, particularly after the election, and this report only shows that the total return from October 1 to December 31st, you can see that we did generate a negative total return in the portfolio. Importantly, that negative total return was less negative than the benchmark, so we did have relative outperformance. And I'm happy to say, if we had this report all the way through the end of January, we generated a positive, I believe it was 57 basis points of return. So it makes our October 1 to Jan 31 performance only, I think, negative 7 basis points over that 4-month time frame, which again is in excess of the benchmark. But again, the big takeaway is that since we started investing on behalf of your organization, the total return is positive. We just started calculating it as of the end of the fourth quarter. So that's what I was planning on presenting today. I'm happy to answer any questions anyone might have to support the organization.
Thank you very much, Mr. Kennedy. First, we're gonna go to public comment if there's any.
There is none, Madam Chair.
It's seeing none. Do we have any director comments or questions?
Through the chair, is this presentation available for us?
I'm happy to take that. Yes, Madam Director, it will be posted, Mari, helping out here to the website.
Right, they'll build the website tonight or tomorrow.
Thank you.
That email to me, Director Washington.
Yes, we can arrange that. Yes.
Thank you, sir.
Any other director comments, questions? I have no questions. I just want to thank you for the work and the the fiscal sort of, I guess landscape is quite interesting to say the least. So we really appreciate you taking close attention to all of it. And I really appreciated the guardrails, the infrastructure that you mentioned, which is always gives us peace of mind. Thank you so much for your presentation. And with that, we're going to then, this is a receive and file. So we'll receive and file treasurer's report for period ending December 31st, 2024. That brings us to the end of our agenda, unless there are any committee member announcements at this time.
None for me, Madam Chair. Thank you.
I have none. Thank you.
All right, well, great. We are adjourned. Thank you very much.
Thank you. Thank you, Madam Chair.